Welcome to Lighthouse Outlook, the podcast where we talk less about the markets and more about what matters to the people navigating them. From family offices to founders, we go beyond the numbers to unpack risk, legacy, and the human side of capital. Hosted by the team at McNichol & Associates Asset Management. Welcome, everyone. Joe, take it away.
Great. Thanks a lot. Good morning, everyone. It's August the 6th. Pretty good story on our land investments with Connor. Quick update on Global Solutions team, and then over to charts of the week. So just as a reminder, our land banking program here is, as we like to say, made a quantum leap from kind of our earlier forays into land investments with a Canadian group. These next couple of deals are sponsored by Paul Connor and his other co-managing principal, Philip Guyton. And so asset number one is a big one. This is 1,154 acres. It's actually more like 1,200 acres because we bought into a stake of phase two, which is like see where the downward sloping straight line goes. And then there's two extra pieces of land there. So we got that as well. This is basically an equity partnership in a logistics asset just outside of Houston, Texas. And the asset includes the CMC Railway. And so we do get a dividend from that. The project's already closed on 10 parcels to end users and has built out nearly, coming up on 1,000 rail car spaces to date. So the railway line you can see is on the right-hand side of this property, and the strategic significance of it is it feeds into the main line. So phase two is now underway, and we're kind of at a point now where the partnership is negotiating a financing agreement with a large institutional lender. This is one of the best performing anythings we have. So Connor's reporting is a little bit, you kind of got to, make sure you've had some coffee, but the number you want to look at is 471%. So that's kind of essentially our multiple. So our multiple to date is about a 4.7x, and this is a pretty big check. So if they were to vacate it now, you'd be looking at 4.7 less fees, carry, and legal and stuff. So you're still up well over 4 times. And this is benefiting from the United States' sort of focus on these types of assets in terms of reshoring and nearshoring. So very, very good on that. River Ranch is the second asset within the land banking program with Connor. We talked about this one before. It's a preferred equity deal for an MPC, so a master planned community. These are pretty fancy homes. Maybe fancy is not the word, but like really, really nice. And these MPCs that they build with Land Tejas and some of these other groups end up looking almost like resorts. So the one asset, forget the name, but it's got that crystal lagoon, which we talked about. And so this one has basically completed the sales of 1,000 finished lots to 15 home builders since inception. And by the way, this one's been in the 360 fund for a couple of years now. But these ones are moving quite quickly, and you're already looking at a 25% internal rate of return with on an unlevered basis, which is great. So this is the River Ranch numbers. The 84% in that percentage column, we're not down. It's 84% remaining after we've already gotten back more than half of our money. So as these land banks make certain milestones in their history, they can actually kick out money to as the lots get sold to home builders, we get money from that. So it's a pretty good deal. I mean, I don't, got no problems with them. And then Sealy 300 is one we did, I feel like it was last April. So this one's just over a year. This is an all cash land deal, which is another sort of attractive feature. Sometimes with land, particularly early on, you can't really get a loan for it on attractive terms because it's, it's just dirt. It doesn't pay you rent. It definitely holds its value, but you can't, rent out just dirt that's not been processed or whatever. And so this one's going to hit 20% pretty easily. And it was, the nomenclature is pretty easy. So Sealy is the township. It's in Sealy, Texas. The actual, community name for the land that you see on the right-hand slide is called the Grove. So there's like a pond in there and stuff. And The 300 is obviously 300 acres. And so they've basically about a year ago finalized the plan of development with the county, and they're getting LOIs from home builders, which is what you want. So Sealy is up about 153%, so about a 1.5 at this point. And again, some of these deals have moved quickly. There was one in Rosenberg, Texas, which is another county that almost as soon as I made the subscription, we were getting money back. That must have been a record. So once again, land done properly can be really really great. Quick update from Global Solutions team. This is an AI kind of software and ticketing company, really focused on travel rewards and loyalty. There are some pending news releases here that they've asked to kind of be quiet about. But the real story is they're broadening out their revenue base and are in discussions with one of the major motorsports racing companies. And I'll kind of leave it at that for your imagination. So we should get an update in October. Well, excuse me, the update on the company's current fiscal year should be coming out in a few weeks, and then the pro forma, month or two after that. In charts of the weekland, Andrew's expectation is for a bit of a pullback to this 75, 77 level. Should find some support there, and sounds like it could be a good entry point. Overall, he feels pretty good about stocks. And, here we sort of saw the blip there on the upper right-hand side, but it's really this second chart here. This one is the longer term chart. You're now noticing it is kind of hard to see due to the resolution, but the main thing here is that this channel, and again, this is a very long-term chart, goes back several decades. The point is that the stocks, are remaining above this upper trend line, and that's constructive from a bigger picture perspective. This is sort of one of these more dominant market-based indicators, these long-term charts, and sounds like stocks are still looking pretty good. And his overall messaging this week is if you're not in stocks, you're not in much. And so this is again the S&P 500 breaking out to these new highs. You kind of wanted to see this sustain itself a little bit better. Again, he says in the short term, you might, see this fizzle out here. But the good news is you've got that support zone at 75 and a half, 76-ish, which looks pretty good. Tech. So we've kind of, there's been areas of tech that we've been following. This is the XLK, which is sort of a broader tech basket. It's not necessarily, DRAM or the Mag 7. It's sort of got its own composition, but, it's acting similar to, he says, the way it did in early 25. And then again, in this year. So the point is in each case, XLK broke clearly under that second standard deviation band, and then rallies pretty good. So it does kind of, this particular sector has a decent track record of, you wait until it gets, starched, and then you go in and you start picking up your favorite companies. And so, there's going to traditionally November and October are pretty big in software, Take-Two Interactive Software, the publicly big, technology company. Well, it's a software company. They've got Grand Theft Auto 6 supposedly coming out this November. It's been delayed several times, but it is widely expected to be the biggest anything ever. And pre-orders are already at $3 billion, as I understand it. I got to just check into that on a video game website. But $3 billion is just in pre-orders is almost as much as Grand Theft Auto 5, the predecessor, sold in like 10 years. So this is a white hot video game, and potentially, a single product that could move the share price, because there's all sorts of online subscription features that you can bolt on to these really high-end video games. Finishing off with a few more. This is the SOX, the semiconductor index. Sounds like it's had a bit of a rough patch. It's kind of making its way back up. The problem is it's sort of bumped into this band of overhead resistance and a pretty kind of flattish looking. I believe that's the 50-day moving average there. We'll see how it does. VIX. What he's saying here about the VIX is kind of interesting, because there is a bit of a slight divergence. And he kind of would have liked, he thinks about stocks as like a really ornery little dog. It's dogs are supposed to be a little bit, I guess, rough, as it were. And so this VIX appeared to, confirm movement in the S&P 500. So you could see it kind of perked up, and then it went down. So he's just saying that's a bit of a divergence. He would actually like to see a little bit more volatility, because it would sort of signify a little bit more urgency to get back into stocks. Advanced decline line looks pretty good, actually. So it is on the up and up, both in the short term and for a decent part of this year. Obviously, March, April, not so much. And that's it for me. I'll pass it back to the team. Happy Thursday.
Thanks, Joe. Ken, you ready to go there?
Yeah. Typical NASDAQ Dorsey Wright report. Some good slides at the end. I'll try to get to pretty quickly. Disclaimer: in Canada, we're not offering securities advice to Canadian residents. Just contact us today. And then same for U.S. Viewers and investors. Just contact us through our email or website at mcnichol.com, and we'd be happy to help you out with anything. Looking here at the S&P 500, there's an 8-box reversal this week. You can see upward, creating that new buy signal. That's the first since May that we've actually had. There's now this strong support zone created, which is a positive sign. 8, 9, and 10 boxes lower. So kind of a good setup for the S&P 500 right now. A vertical price objective moved up to 8,600. Momentum remains positive on a daily, weekly, and monthly, which is positive. Overbought, oversold up to 59%. That is the highest since May 29th. And then obviously it's strong rebound really for most of the market. Really broad strength. The only weakness that I saw was really in energy and healthcare and Apple, which kind of reflects a bit of a return to risk on after a bit of a beat down the previous few weeks for a lot of those high growth risk on companies. Now, looking here, the NASDAQ 14-box reversal this week, you can see it's sitting at resistance now. So it has 3 overhead resistance lines. So important to watch those. Created its first buy signal since late June. The only thing is the drawdown that we had over the last few weeks broke down all the short-term support lines. So other than the support that it created last week, only support line is all the way down in the March lows. So important to watch there. And then overbought, oversold 7%. That's the highest in 7 weeks. Demand remains soft despite the rebound. So important to watch there. And valuations continue to move higher this week with the bounce back in the NASDAQ 100 sitting at about 36 times trailing 12-month earnings. So not cheap by any extent. Looking here, the Dow 3-box increase week over week, all-time high this week on the chart. Support 9, 12, and 14 boxes lower, which is positive. Really a strong week for most of its constituents, except for Apple. I still think it has the strongest setup amongst the U.S. indices. Price objective 50,200. Overbought, oversold 96%. Continued elevated demand despite tech strength this week. So you can still see some demand for value, or perhaps investors are getting a little more diversified compared to a few weeks ago or a few months ago when they just seemed to be piling into stocks or their favorite AI ETF or some leveraged ETF. The overbought, oversold for the Dow, which I would say is more traditionally leaning value indice, highest since December of 2023. So really important to watch those metrics in our opinion. And then looking north of the border, 2-box increase week over week, strong rebound for materials. Obviously over the last week, we're glad we can rotate out of those material names. We've been helped along with that, some of our energy exposure, some of our industrials exposure, and some of our staples exposure this year, while some of the materials names that we've held lagged, obviously. Overbought, oversold 73%. That's the highest since the second week of the year. It did remain elevated through July. So it seems like there is a flight to diversification and uncorrelated returns to AI. And I think that comes in the form of perhaps the Toronto Stock Exchange, but more importantly, I think a lot of those gold miners are providing completely uncorrelated returns to the AI trade, where in a world, it seems like everything is correlated with that trade. Looking here at the VIX, flat week over week, a new sell signal to start August, and a negative trend this week began. I remember last week I mentioned like we're seeing this bottom here and perhaps move higher. Well, it broke down almost immediately. So we'll have to continue to watch that. Bullish percentage chart, S&P 500 up 6%, moving higher, obviously. Large reversal. Didn't actually reach that low despite the market weakness. And then the New York Stock Exchange remains in the 50% level. Percent positive trend, 68%, up 8%. Dow on the right, 70%. slid down 4%. So both kind of in that territory where they're on the edge of being bearish or bullish. So we'll continue to watch that. And then the Toronto Stock Exchange, sorry, no changes there. So we'll just flip through that. And then asset class rankings, not a lot of changes. Basic materials picked up a number of buy signals really driven by yesterday's movements. But other than that, no huge moves. So I'll just flip through and get over to these charts. Looking here, this is the First Trust REIT Index Fund, which is now at an all-time high on the chart as of July 17th, but still at an all-time high on the chart. And then on the right side, really what I wanted to talk about was the relative strength of this ETF and the overall, some certain select REITs, I'll say, more traditionally the healthcare ones right now, really gaining relative strength relative to the S&P 500 equal weight index. This chart flipped over for the first time in 2 years. Obviously, we've had well over a decade of sustained S&P 500 relative strength compared to this REIT on this chart on the right. But the trend change could be something of note, especially if we get a buy signal and a breakout, and we could get some sustained outperformance. Now, we don't invest in REITs, publicly listed real estate equities. Obviously, all the exposure comes from Joseph, usually why I don't chat about real estate, but just a really interesting chart I didn't want to give up this week. And then this is a chart actually that David sent to me yesterday, and I was going to put it into the weekly commentary, but I'd already completed it. So I just wanted to share it today. Just talking about margin and the market running on borrowed money. You can see third straight monthly record in terms of margin, 1.502 in margin debt, 12-month rate of change up 50. And you can see here in the 94th percentile when you're going back with data all the way back to 1998. So obviously margin debt, leverage, reflection of investor sentiment. When this is at an all-time high, it's close to, you can see the other three peaks. Obviously has a huge reflection, and perhaps there could be a bubble. And I think really the pullback in the AI names probably decreases the probability of that happening in the very, very, very short term, just with their sharp and large pullbacks, the sharp and large pullback of the South Korean market, obviously, which is being really driven by AI. So we'll have to continue to watch that closely. Looking here, this is the gold sector index fund. We own this in a relative strength platform, but only reason I highlighted it, broke out of this negative trend over the last week, really had a large breakout yesterday. Price target moved actually bullish to 65.50, which would be close to its all-time high, down 5% year to date, which in the grand scheme of things is not crazy, especially with how it started, how the recent few months have looked. And then trading, obviously, 15 times trailing 12-month earnings. Some of these ETFs, you can pick them up for, I think, 9 to 11 times forward earnings. Margins continue to remain strong. Balance sheets remain strong for these miners. I think it's a really attractive time from a fundamental standpoint, but also a technical standpoint to look at a lot of these names. As you can see here, this breakout on this point figure chart, and then this chart from Tavi Costa and Bloomberg Research, really seeing a multi-month breakout, which actually correlates exactly with this slide, just in a candlestick format. So I'll jump past this, and then just looking at gold. Another reason I'm talking about it this week, it seems like we finally found some support in the price for gold. About $4,000. It's bounced off that numerous times. Price target now is flipped over to 4,200, which I would say is neutral. Year to date, it's down about 5%. Really been beaten up the last few weeks, but perhaps in theory, we've been in the right environment for gold to outperform. But I think the strong performance last year is led to some rotation from investors and some profit taking. Why do I say perfect environment? Obviously, inflation is picking up, geopolitical uncertainty, and then you got all this hesitation and worry when it comes to the market and the AI trade and valuation. So I think gold could have a nice rebound here and at least remain elevated where some of these miners are producing some really strong numbers on their quarterly earnings reports. Looking here, this is SpaceX. Just obviously we all know 912, that's not supposed to be a dollar sign, but 912 million shares unlocked today, 140% more than their IPO. Shares are already down 33, but we'll have to see obviously how they perform today with the new shares being unlocked. I don't think the second tranche is going to get unlocked because I think the stock price had to be above, like it was like I don't know, 120% or 1.2 times the original IPO price, and we're well below that. Or maybe it's 1.35 times. I forget what it is exactly. And some more shares unlock at the end of August. But basically every month I saw a map of it written out by, I think, Morgan Stanley or Barclays or one of those big investment banks. And basically shares are being unlocked like once to twice a month for the next year, all the way up until Elon Musk's massive ownership can unlock in, I think, June of 27. So really could be a rocky and volatile period for SpaceX holders. And then just wanted to talk about Emerson Electric, comparing this to the S&P 500 and strong outperformance. We've owned this for quite some time. Obviously an industrial firm that provides automation, control systems, climate control solutions, and then they also provide engineering services for numerous markets. On the technical side, it really looks strong, 4 to 5 in terms of price target, $186, 22 times forward earnings, broke resistance from February yesterday to an all-time high. So really getting that breakout. And then late last week, they reported their quarterly earnings and their numbers were very strong. Earnings per share and revenue beats. They raised sale guidance for fiscal year 26 by 5%. About $2.2 billion in share repurchases and dividends in 2026 so far, and they want to continue that return of capital to shareholders. Really, their growth is being driven by the robust automation in North America and also Asia. And I think that the street also believes that their slightly elevated valuation is justified by their strong growth numbers and their strong pipeline. So just a name to follow that we've owned for quite some time. And then this is, I will say, by AI is the worst image I think I've created in this trend last few weeks that I've done. Obviously, Ken Griffin will get pulled. I'll let this image speak for itself. And so I'll pass it over to you, Dave.
Okay, great. So this is a long one here, 36 pages. I'm just going to touch on a few things here. Gary and another one coming up, Housington, have been deflationists, and so they've been creamed if they've stayed in the long bond, etc. So let's see what he does with his summation here. So he's long the US dollar, long treasury bills. He doesn't say short or long, and avoiding the Meg 7. Yeah, okay. Extra cash opportunities to own treasury bonds. So I don't think this is going to be working out for him in the short run. In the long run, he's going to be right. His clients must be very, very patient to stick with this when they see the whole market melting up. So good luck to that one. Housington, I have not read this. A friend of mine, Michael Higgins, who started Dogs of the Dow in the 70s. Okay, so a global deflationary era. Yeah, that's right. 2020 is when it bottomed out. So I'll report back next week as to what I learned here. But some reading to do there. Same thing as with our friends Glenorchy in Australia and New Zealand. We access them for their value management and also their global dividend program. And I've shown them before. They always wisely show what's happening around the world with people sending in photographs of sunrises and sunsets. Yeah, so there are a bunch of subjects there, but nothing doesn't tell you much. They're just trying to encourage you to read. But I always learn something from these guys. They think very differently than just about everybody else we work with in a good way, though. So a high-tech strategist. Yeah, Fred Hickey is, the headline says it there, the party is almost over. And so he's covering everything from NVIDIA to IG tech spreads versus Oracle 5-year paper. Yeah, so he's getting a lot more detailed here. He's got his son working with him now. And so coming up with all sorts of other ideas. But the last half will be on gold. And, he's a complete gold bug now. And so I've got a rainy day here. Hopefully I'll find some time this afternoon to get through that. And then the morning coffee did come in a little earlier today, which is good, on a Thursday. And you can see Canada is tearing it up at almost 15% up. And these 10-year numbers are incredible for Canada. And but no, Canada is probably one of the best performing markets in the world, next to Italy. And then Japan has got such inflation problems there that this is an inflationary stock market, but you're getting creamed in the yen. So unless you're able to hedge that out. And India is trying to dig out of its negative hole for some time, and so is China. And then finally our venture exchange, which has always been, it was high flying earlier this year, and now it's underwater. Oil, I'll cover oil more on the point and figures, but up 46% year to date, and looks like it's starting to come off again as some more positive news about the wars come out, but it's just a seesaw of news when it comes to things. Gold's had a tremendous recovery here, as has silver. Copper is looking very, very strong. Canadian dollar, people are talking about such a strong US dollar. You think this Canadian dollar would be getting a lot weaker, but it's stuck in sort of the 71 cent range. And I'll cover that more with point and figure, which I'll jump to now. Okay, so Canadian dollar still at 71 cents, and these vertical price objectives of 70 cents, which we're there right now essentially in the short run, and 62 cents in the long run. So we are going to see, according to point and figure direction, a weaker Canadian dollar in time. Meanwhile, the US dollar spot index is at 100 and measures up to 109. So as that gets stronger, that puts downside weakness on our Canadian dollar relative to the US. On the euro gets weakened. The yen is continuing to weaken as they're dealing with the greatest amount of inflation on the planet, probably. They don't have even their own oil, so we're in better shape that way in Canada. Okay, now moving down to out of currencies into crude. So $75. I like these targets. They're not 100% foolproof. Otherwise, we'd be running something against them, but it does give some direction. So down to 63 for oil, and looks like nat gas is going to come off. But whereas the producers, big time upside there. Copper has some more upside. So does uranium. Gold, we've got a 4,700 target for futures and 4,300 for spot price. Gold bugs up huge by a third there, and the VanEck majors up big, the juniors up bigger, gold juniors, and then silver up. So the whole precious metal complex is looking like it's back in order here. So for those individuals who traded it down, might want to be buying back. And for us, we can't trade this. It's too difficult in our opinion. So when we're in a secular trend of inflation here, we're just going to hold these positions and trim them from time to time. And then silver traders, big up, juniors up a little, and platinum big up, or not that big, 1,700 to 1,800, but up nonetheless. Now in the crypto space, no change there, still 22,000 target for Bitcoin, whereas Ethereum has upside now, and Solana big downside, and the whole crypto index up. So you're getting sort of mixed messages there, but it's better trend change than we saw before where everything was measuring down. Canadian banks look strong. Broker dealers in the US look strong. So as one of our analysts has stated, David Hunter, you're going to see just about everything pulled up in this final melt up in the market. Where it stops and where it ends is anybody's guess. It's hard to forecast that accurately. Finishing up on interest rates, and then I'll pass it over to, we've got the 2-year at over 4% now, 4.2, and measuring up to over 6. So the Fed's going to have to be raising rate in order to keep up with that part of the curve. The 5-year at 4.3 up to 5.25. The 10-year at 4.6 up to almost 5%. And the 30-year at 5.2, well above 5% now, up to 6.2. So the entire curve, in my opinion, according to this, looks still very inflationary. And if you're going to invest in the bond market, stay short, but you're still going to have to hold your nose when your statement comes to you every month or how often you look at it online, because things will trend down until maturity. Michael Kuba did not have any commentary this week, but he did put out his quarterly commentary. We have helped sponsor him on this, and I'm glad we have. You can see his results have been very strong. He's still trying to raise capital, so want to continue to help him with that. Especially attractive Sharpe ratio, well above 1. I think that's finally it for me. So Sean, are you ready there?
Yeah.
There you go.
Okay, it's a macro overview, not financial advice. The big change is adding to SPY and QQQ exposure and not looking to short anything at the moment. Watching the VIX, if the VIX heads down below 15 and touches 14, I'm going to be taking a position in that for a few months. Asset classes over the last week were kind of dominated by moves in the US dollar, which we'll get to. We've seen, again, a lot of movement around crude. Apparently a deal is done. Iran's going to have oversight over the Strait of Hormuz, but not be allowed to impose transit fees. The S&P had a great week on the back of some blowout earnings. When we look at asset classes over 1, 3, and 5 years, commodities dominated by oil and gold have done pretty well. International developed markets have done well. Gold has done incredibly well. The thing that is being crushed are bonds, and we will get into that a little bit. Economics continue to be slow and steady. The one thing that really jumped out at me this morning was the Atlanta Fed GDP now is now predicting 5.9% growth. But when I dug into that, that was basically because the estimates are still a little bit too fresh and too few. And some revisions in inventories pop that out quite a bit. And if you look here, you can see the blue chip consensus is still tracking around 2% growth. Now, where that ends up, we will see. 2% isn't a lot. We've got to be keeping an eye on employment. Employment, we'll find a lot more tomorrow. The US dollar, to me, was a big story over the last week. We've seen a massive move in the trend, which was heading up, got reversed. And it was basically, a lot of stuff going on with this yen trade. Now, why have I been blathering on about the yen trade for the last few months? Well, I was watching for intervention, and literally last week, even while our presentation was going on, what happened was the Bank of Japan coordinated with the United States intervened dramatically. Last week we said, we were expecting a BOJ intervention, and boy, did it ever happen. This was a massive move. We expected 2 to 4%. And I think the move in the first few days was 3.8%, which in a currency market for a GDP, of Japan's being in like top 7 in the world, it is just a massive move. Is it going to hold? I don't think so. Why would the U.S. support Japan in this effort? Because Japan is the largest holder of treasuries outside of the U.S. border. The U.S. does not want to see interest rates go higher. If the Japanese were to sell more treasuries, then rates are going to go higher in the long end, which the Fed can't control. So the Treasury stepped in, signaled that they were going to be intervening. I mean, some people would have made an absolute killing on this trade. And that dollar weakness is rippling through all of these assets. So gold is broken out of the box that we indicated in our previous report. We now see this base having set like a good trading range, and it's broken out. We'll be buying gold. Oil continues to chop, and that's just based on war news and negotiations. One thing to note is that the strategic reserve is being highly used. Europe has less than 23 days of inventory across distillates, well below the 90 days, which they like to have. So this is starting to become pretty critical at a time of peak holiday season, particularly in Europe. And here we can see this great chart. The U.S. emergency oil reserve has fallen to its lowest level since April 1983. And it's the direction of the decline, which is quite concerning, despite there being a small build in Cushing inventories recently. Rates and credit, this is going to get a lot more interesting as 10, 30-year rates get pressured higher. Keep an eye on this space. We could see some big moves starting to happen. And again, this space is usually incredibly leveraged. The S&P 500, my previous Markov model had indicated that we'd flip to a bear. That only lasted a couple of days. We moved to a sideways market characterization 2 days ago. I would expect if this trend continues, we're going to flip to a bull market indication. We see the heat map. Blue, yellow, and green are clear. We've seen a breakout from this kind of top formation. So right now, I'm a buyer of the S&P 500. We've gone from fear to greed in terms of sentiment. We see good breadth across the S&P 500, 20, 50-day, and 200-day moving averages. These are very good numbers. This is literally a Goldilocks looking market right now with the VIX where it is. The equity regime model has gone from bear to sideways, and the probability is that, over the next short while, we're likely to be bull to sideways. So to me, this is good. And I'm okay taking exposure here despite the valuations. Crypto market, just dead. They can't get their act together to pass this Clarity Act, which is definitely needed for sentiment to change. The Democrats are just falling into line, saying that they're not going to vote for it. Game theory would say the Republicans in the Senate should vote for it. They'll get the majority, but it won't be enough to prevent a filibuster. But it will call out the Democrats who previously had supported crypto. And there's a bunch of them in California where crypto is a hot issue, and the largest political action committee in the election was related to crypto. So do you want to come out as a Democrat heading into midterm elections, basically, giving the finger to the people with the money to donate to your cause? It's going to be interesting to see if they can get 7 Democrats to break ranks. But we will see. The time for this to happen is basically this week. If it doesn't happen, I think crypto heads materially lower, and I would just avoid it until the Clarity Act passes. You will see things like Coinbase, Galaxy Digital, and even MicroStrategy probably move up 2 to even 5 times what Bitcoin does if this thing passes. Here's a chart, just overall Bitcoin bear. We're going sideways recently. Short term, you can take a position if you want to, but I think we're going to see the heat map red top to bottom if this Clarity doesn't pass this week.
That was great, Sean. Chris, anything to update us with?
Sure. Well, I wanted to follow up on Sean's comments about how he believes that, the rally in the yen is temporary, because I think that big drop in the US dollar pretty clearly explains why the Canadian dollar's rallied so much in the last couple of weeks. And I mean, it's been a reasonably strong move for the Canadian dollar, but it sounds like you're thinking that that's temporary, which also makes sense from a fundamental point of view, because if we do have a deal in Iran, the oil price, should drop quite a bit. It's already falling, but we might see oil, and we know Canada's quite a big petrocurrency. The rates market, I guess there's been a lot of commentary that's not in good shape, which certainly the facts bear that out. Looking at the forecast for hikes, interestingly enough, in Canada, the forecasts were, not a lot, like basically flat throughout 2027. But we've now moved into a forecast model of 2 hikes in 2027, and that may be, maybe coming off the strength in the Canadian dollar, that people are interpreting that as a stronger Canadian economy, which, maybe if we get these pipeline projects underway, Carney's major projects office starts to actually spend some money, big money, that may happen. In the U.S., it seems crazy that, there's some doubt that the U.S. will even, not consider 25 basis points, given where the 2-year is now at a midpoint of 3 5/8, 350 to 375. Currently, 2 years at 422, which is implying almost 2 hikes. Not hiking in September seems crazy, but it is, according to the futures markets, a bit of a coin flip. So, but that reverses in the October meeting. It's about an 80% probability, but then you've got politics right before the midterms, so that rolls into a slam dunk into December. But it's going to be a lot of chatter out there, a lot of talk and gnawing, but the bond market's certainly testing the Fed, saying, come on, Warsh, let's see if you're going to stick to your philosophy of 2% inflation. And if he doesn't, the long end's going to go nuts on yields are going to just shoot up. I think that's what Bessent's got to be concerned about, is really sort of losing control of the long end, which, has down again today and, really, really rising high. So I guess, some people, maybe people are thinking that a little too early to get in, but, in the U.S., these rates are starting to look attractive. So you always have to take the opposite view of things. But, on that note, I'll pass it back to you, Dave.
Good stuff, Chris. Paul, what's happening in Montreal?
Yeah, hey guys. volatile markets, right? Should have sold in May, gone away, but this is correct 70% of the time. But we're getting a nice bounce in August, right? Seasonal trades back on for precious metals, thankfully, because we own a lot, and the equities basically across the board went down somewhere between 35 and 50%. So a big drawdown in precious metals. So we're thankful that it's stabilizing at least. We think it's going back up. We think gold's bottomed because very simple reason is that the tethered gold is a huge new phenomenon, and the banks are buying, right? The central banks are buying. So you can buy all sorts of. We find them the cheapest stocks, by the way, in the stock market worldwide, right? You can buy IM Gold right now at 3 times cash flow. It's amazing. It's just amazing how cheap these things are, and so that's good. Telsat, I just wanted to bring up, every 20 years you get an opportunity to make 10 times your money without taking a whole lot of risk. Telsat, the announcement this week, don't know if everybody caught that, but Carney's announced they're writing a check for $1.5 billion US to Telsat to launch a military communication satellite network. And I don't think people understand at all what this business model is. But I spoke to David McFadgen, right? I've sent you guys reports on it. McFadgen's written it up. He's very smart. The guys from Stifel are uber bullish as well. So here's the math. The market cap of the company is under 2 billion US, right? So when the government gives you as much capital as your entire market cap, somebody should pay attention, right? And so what they're going to do, the government's going to pay for the network. So there's absolutely zero financial draw on the company. The thing is going to get built, right? The schedule exists, and so they will be up and running a military communication network in space with no competition. It will not compete with Starlink. Starlink's not going to go. Starlink's going to do military stuff for the U.S. military, but not the rest of the world. So Telsat's going to be the only player globally for a number of years. And what we think is going to happen is they're going to go and market to Japan, Taiwan, all the NATO plus countries. And those governments are going to pay big dollars to Telsat to grab space on the network so that it's going to work worldwide, and a number of governments are going to share it. And so you can imagine they're getting 1.5 billion now, and then the Japanese government will write them a check for 100, 200, 300 million dollars, and then so will Taiwan, and so will Germany, and it goes on and on and on. And so the management put out a 5-year guidance for this new project, and they said in 5 years, in 2032, this network will have $5 billion in revenue and $4 billion US in EBITDA, cash flow. Okay, 80% margins. The market cap of this company is $2 billion. Okay, so according to McFadgen, he said if they hit their $4 billion EBITDA number, the company's worth 40 to 50 billion US. Okay, so 2032, yeah, it's a long way away, I guess. But in satellite world, 5 years is not long at all. 5 years is the basic, right, to get a network up and running. You got to book all this stuff with SpaceX or whoever, and you got to get the rights and the frequencies and all this stuff. It's tremendously complicated. Usually it takes 7-10 years. So here you've got a Canadian company that's going to. The stock went up 43% on the news. As soon as I heard that news, an hour into it, I said the stock will be up 45% on the day. It was only up 25% at that point, and it ended the day up 45%. Here's my prediction now: it goes to $120 by December 1st. So it's at 75 now. So you get a nice return between now and December 1st. On December 1st, they're going to renegotiate their debt package with their debt holders. And then according to McFadgen, the stock is going to go nowhere but up through into 28 with all these announcements and with the network actually up and running. So Stifel said the stock could go to $600. They came out with a report, the next day, and McFadgen's number is now $1,000. So the stock's at $75. So I think it's the only company in Canada that is basically, for every portfolio. I don't care what your risk tolerance is. For every single portfolio, you need to own some of Telsat because it's a play on, it's a massive growth story. It's a play on military. It's a play on defense. It's a play on space. And there's no financial risk because it's all being funded by governments. And then it's a small cap company, right? And in the satellite world, it's minuscule. And so you've got all this upside, and what's the downside when everything's going to get funded? They have no funding requirements for years to come. And they used to have, there were issues of how they could repay their debt or how they could, because the existing business is declining. So they got declining, one business is declining, but they've got, these other businesses that are absolutely taking off. So it was complicated. There was some risk on the funding side, and all that risk has gone away. And so, the stock went up 40% for good reason, but this is just the beginning. So I'll flip you guys the two reports I referred to, but Stifel and those guys at ATB, Cormark, I mean, they follow this thing, and Stifel out of the blue said this thing should go to $400, but it could easily go to 600 and upwards from there. I mean, a tremendous opportunity. So it's our biggest holding now. It's my personal largest holding, and I just love the story. So I think you gotta take a look at this. It's actually, the story's getting simpler and simpler, and as you guys all know, SpaceX is all about Starlink and what they're up to. The market will clue into Telsat over time. It's going to happen. The Americans will play it. The Europeans will play it, and so I think it's tremendously exciting play. And so I'll leave you with that, and that's it for me.
Okay. No, good story with Telsat there. It's always been so expensive though, but we'll just try to find an entry point.
Now it's I don't even know how you could even refer to it. I mean, they gave guidance. I've never seen that before in my life, where a company gives 5-year guidance of 80% margins, creating a business of $5 billion. I mean, I've just never seen it. So I think one needs to pay attention. I don't think it's too cheap in the satellite world. Certainly compared to SpaceX, it's $1 trillion in valuation versus $4 billion. So
yeah.
Anyway, exciting times. And anyway, a play on Canada. I think this is one of the things, the concept being that the Liberals are spending a lot of money to keep this economy going, and of course we've talked about defense and military. This all fits into that bucket, and this is a very simple way to play that emerging theme. I mean, how can you not pay attention to this, right? I mean, there are not many companies like this in North America, but there are none in Canada.
Thanks for listening to Lighthouse Outlook. If this conversation sparked a new perspective, share it with someone who thinks differently. Subscribe for fresh episodes every 2 weeks, and visit mcnichollasset.com to learn more.